today's training is going to be a multi-part training. And the reason is because today is going to be more focused on showing you how to improve your entries. And then we're going to follow up with another training on how to be more accurate with your lot size and how to be more accurate with your stop loss, right? Because there's three primary components to managing a trade. Three primary components. When do you get into the trade? What lot size should you be using on that trade? And when to get out of that trade. And a big part of when to get out, of course, is going to be where's your stop loss being set? Why is your stop loss being set there? And where's your take profit? If you have a hard take profit and you're using the trade manager tool. So today's training is going to mostly focus on how to get into the trade at a much more ideal price. And it's very, very powerful because what Coach Mo is going to show you is on trades where you may have lost a trade, you could change that trade into a winning trade, or you could change that to where it becomes a break-even trade. Or if you're using a risk-to-reward strategy, I know some of you are learning and you're starting to catch on to the importance of having a risk-to-reward plan, where you would have had, let's say, a one-to-one risk-to-reward. That means the distance between your entry price and your stop loss is equal to your entry price and your take profit. There's a way to increase that risk to reward from a one-to-one instead to a one-to-two, a one-to-three on the exact same trade setup, right? So it's a very powerful technique. For those of you that are new, and if you're still struggling on being consistent with your wins, what this is going to do is it's going to significantly reduce your risk and increase the amount that you can win on a winning trade. So again, hopefully this helps you look forward to lots of exclusive training that again will be now added instead of just to a public Vimeo channel. It'll be uploaded to the member dashboard, and there's more security there so that only paid members have access to the content going forward. So that's exciting for us because now we can let loose, right? We could just let it all out. So if you want us to let it all out, let us know in the chat. We have the chat open. Our goal is to sharpen your skills. Iron sharpens iron, get you up to a point of proficiency where you could trade alongside of us and you can see great results inside your trading account. So without any further ado, I'm going to mute my line out and I'm going to bring on Coach Mo, who's going to be able to share his screen, and he's going to be able to show you the starting point for today's topic, which is how to get into better entries, how to reduce your risk, and some ninja strategies that you can use when trading alerts to take what would have been losing alerts and turn them into winning or even break-even alerts, which improves your performance overall. So thank you very much, folks, for jumping on live on a day like today, a U.S. bank holiday. I'm going to go ahead and pass the call to Coach Mo.
Thank you so much, Sal. So exciting. I tell you, this weekend was amazing. It's still amazing. Everything's great. The gentlemen and the ladies that hosted us did a phenomenal job. They were so amazing. Great hosts, just so generous, so awesome. And so we just want to give a shout out to the group that was really just such amazing time that we had. Now, what I'm going to do is I'm going to share with you a really cool strategy that really I think is going to help you improve your results, because what we talk about is minimizing risk, maximizing results, right? Maximizing success, maximizing profit. And so this strategy is going to help you do that. And it's going to help you do that without really thinking too much. Like, you're not going to have to think. It's just going to do it pretty simply. And so we're going to put some guidelines with it. And this is just the introduction to it. So let me share my screen real quick for you. You can see my screen. That's great. Okay, so we have two charts loaded up here. You're looking at the NAS 100 using the 8-minute trader close all trades feature, okay, which if you want to find that template, all you got to do is you click in this little icon at the top here. You scroll down, you click on 8-minute trader. That's simple, right? So you click 8-minute trader and this template comes up. And I have another template set up, which is the stop loss, take profit settings, which is the post 8 alerts trade manager. And because I'm on the NAS 100 M1, which is the 1 minute, I clicked here, scroll down on the to pick a template. And I've got the post 8 alerts CTM1. Why M1? Because I'm on the 1 minute chart. If I'm on the 5-minute chart or 15-minute or 1 hour, then I would go post 8 alerts CTM5. But I am on a 1 minute chart, so it's M1. So I click that. Now, this is the strategy here. When you tend to get a buy alert or a sell alert, but we're going to do this based on a buy alert. If you notice, let's say the buy alert came in right here. So I'm going to just annotate this for a second. We're going to put a little text box here. I'm going to say buy right here. Let's say the buy alert came in right here. Okay. Now it's blue right now, but usually it's yellow. But let's say it came in right here. What tends to happen is I'm going to show you real quick, and I'm going to bring out the crosshair measuring tool. All right, came in over here. You want to put your stop loss right there. If you look, it's about $40, let's say, right? You're looking over here, your stop loss is at 2,000 points, which is $20. If you look at where the price is currently, it's always cool to say you could put your mouse on the price and then just drag down, and you could drag it at an angle. I want you to learn this. Whether you drag straight down or at an angle, it's the same area. So look, 1760 right here. And if you go right here, it's still 1760. So it doesn't matter. So you could see exactly where you want to put your stop loss, let's say. But for this example, let's say I'm saying to myself, okay, I'm going to jump in this trade as a buy. I got my stop loss and take profit. Oh, I did a sell. Sorry. Let's clear that. Let's get out of that. Hold on. I'm going to go in for a buy. I got my stop loss right here. And I got my take profit right there, right? All you got to do is you go, let's say 50% down from where your entry is to where your stop loss is. You right click buy limit. You close the trade that you're potentially in if you want. And here you have a buy limit, meaning that you're limiting your risk. At this point, your risk is only $9. And it only gets in the trade when it goes and hits your buy limit. Now watch, it's going to hit my buy limit. I'll just wait. And so my risk was normally $20, or let's say 2,000 points. But with a buy limit, your risk gets a lot less. Let's see if it'll hit my buy limit. So that's what's really cool about this. There it is. Now I'm in the trade. Did I have to think about my stop? No, it's sitting right there. If it hits my stop, I'm out. So you could do that, just what I just showed you, on every trade. And you could do what's called a buy limit, limiting your potential loss, because you put instead of it being necessarily a cost average trade, you get in the trade. I'll show you again. Like let's say there was a sell alert. I'm going to do another one right here. I'm going to say another sell. Annotate right here. Let me go right there. So there's a sell alert right here, right? I'm going to measure. Oops. I'm going to measure right here. From here to here is $40. I'm saying, look, that's too much for me. So what I'm going to do is I'm going to put a buy limit. So I'm going to put a sell here. And I'm going to put my buy limit right. I'm going to put a sell limit right here. Right there. I'll close this out. And I still got my sell limit sitting right there. See that? You can delete it. Again, I'll do it again. Click sell, let's say. There it is. I click a sell limit. I can close my existing trade and I still have my sell limit in. I could drag this here. I could drag this all the way up and say, you know what? I want my sell limit. The only way I'm getting in this trade is if it's this small right here. If this candle comes all the way back up, then I'll get into my sell limit. If it doesn't, then it's okay, but I'm mitigating my risk. That's what this does. So this risk, how big is this risk? Well, you put your mouse over the entry, you put it over the stop loss right here. Let's see what the risk is. $14. If you want the risk smaller, you just drag it right here. You just go like that. Now what's your risk? $7. So what these do, these buy limits and sell limits allow you the ability to really bring your losses way down. Because a lot of times we get an alert and it goes against you almost right away, right? Sometimes before it takes off in the other direction. So if a sell comes in, like even like right now, I'll X this out for a second. We'll just close this limit order. Okay. The sell alert comes in. I click sell, then I click sell limit right here. I can close the current trade and I still have this in play. I could take this and say, you know what? I'm going to bring this right here. I could bring this from right there. Look, so this is my risk right here. My little sell limit. This thing's $7. That's it, $7. So if it hits my trade right here, it'll get in, and it even shows you here that this is a sell limit. It's showing you that it's not in the trade yet. It's showing zero profit because it hasn't triggered yet.
Yeah, now real quick, just to chime in, looking at just some of the questions in the chat here. So number one, Coach Mo, can you answer yes or no to this? Can you set the buy limit or sell limit order even without getting into your first trade? If someone doesn't want to get into a trade, quickly close the trade, set a limit order, can they just start from the point of setting a limit order instead of getting in at the price that the market is at when the alert appears?
Yes, so I'll show you how that works. So let me close this out real quick. The only thing is if you do not first create a buy or sell order that's live, if you just click, let's say, sell limit right here, it does not pick up your automatic stop loss and take profit. So that will not be in play. So just be aware of that. If you do that without taking the buy or the sell initially first, which is okay, you can. You see it's right here, but you don't see it. So now what you need to do is you need to go in here and you need to modify it. You need to modify it and add its, let's say, a stop and so you got to do a little bit of extra work here.
Does the click and drag function work the same on a limit order? If you just put a limit order in, can you just click and drag it?
No, what happens is it drags the actual limit order where you want it to go. So it can't drag the stop. Now, what you could do, though, is you could set up a trailing stop automatically for those of you that like the idea for a trailing stop. So you could do that, but it won't create a regular stop and a take profit it won't pick up the trade manager tool if you are not in a trade initially. Like I'll delete this one real quick and I'll show you. So I go in a sell. There's the trade manager right there. It's in play. Then you right click it. You click the sell limit and it put the trade exactly where the live one was. And you can see it's sitting right there. If you look, it's at a $4 risk, let's say, just sitting there, right? So the only thing is it only picks up the stop loss and the take profit that you set in your trade manager after you've already entered the trade. So that's the only thing that you need to be aware of at this point.
Right, that's if you're using the trade manager tool.
Correct.
And you want the stop loss or take profit to be automatically set. Now, for those of you asking, hey, what if that stop loss is too tight? Remember, that's where the stop loss would have been if you would have just gotten into a regular, what's called a market execution order, right? So there's two different types of ways to get into a trade. There's a limit order. That means that you're not just jumping into the trade at whatever price the market is currently at, or there's a market order, or some people call it a market execution order or an execution order. All that means is that you do get in to wherever the price is at right now. When you click buy or sell, that's going to obviously put you in at wherever the price is at. So you can get into where it's at right now, or you can say, I don't want to get into where the price is at right now. I want to get in at this specific price, which may not trigger, right? But the stop loss is above or below the last swing low or swing high, which is where the stop loss would have been had you just jumped in on a regular market order. So it's the same stop loss. The distance is because your entry is a lot closer to the stop loss, then the risk on that trade is significantly reduced. And there's other advantages that we're going to train on what you can do. But who is this for? So I want to clear this up for you guys, because for those of you going like, why would I do that? Why would I not just get in? And why would I move my entry, back to a different price, potentially never getting triggered or getting in at a different price than where the alert comes in? So when an alert comes in, there's a lot of sorry, I hear some noise. You guys can hear me correctly, correct? Okay. Yeah, just checking. Sorry, I'm on my phone. I can't visually see the screen today, just because we're traveling and I don't have my laptop. When a buy or sell alert comes in, that doesn't mean from that price, the market is just going to explode in your favor, right? So like if a buy alert pops up, that doesn't mean that from that exact price that the alert popped in on, that the market's just going to go way up from there. Now, sometimes it does, right? But what that means is that the structure of the market at that moment is much more favorable to the buy side than the sell side. So if you notice on some alerts that come in, let's say a buy alert pops up, you might still get some temporary retracement where price still comes down from there. So if you would have gotten in right away, you're going to have to deal with a little bit of temporary drawdown, and the candles go up and down, a little bit up and down. And then maybe after 2, 3, 5, 6, 7 candles, then the market really takes off to the buy side for a winning trade, right? That's intentional. We designed the post-date alert system to notify you when the structure of the market is shaping itself up for a potential breakout in the direction of the alert, right? Because you don't want to be alerted after the move's already been made, right? You want to get into a move as early as possible. So that means when an alert pops up, many times you have time. You don't need to go and just instantly click the button. Now you can. People do that. I know people compounding their account by doing that. But the whole point is, remember that the alert is alerting you, saying, hey, there's a potential setup. The market is structured for an impending breakout in this direction. It can happen immediately. It may take 2 minutes, 4 minutes, 6 minutes. So if you've been trading the alerts, then you'll notice, again, let's say you get a sell alert, sometimes right when that sell alert pops up, price will come back up, right? It'll start going back upwards, meaning if you would have jumped into that trade, you're going to get a little bit of drawdown. That's where, for a new trader, anxiety starts to kick in. Frustration starts to kick in. They're not experienced with handling drawdown and not knowing where their stop loss should be and if they should close that trade, right? That's exactly who this is for. What you can do when a sell alert comes in, if the price is far away from where you had your stop loss, let's say on a sell alert, then your stop loss would be a few ticks above the last swing high, right? Based on structure, you want to put your stop loss back up above the last swing high. You can set a sell limit order instead of a market order. So instead of just getting in, you can say, okay, that's a bigger gap between where I want my stop loss and where the current price is at. So I'm going to set a sell limit order closer to where my stop loss would have already been. And if that gets triggered, what we call, like Coach Moore and myself, we call that a retest, right? So a lot of times, the market has highs and lows. And if you notice, there's, you've been trained on support and resistance, right? There's a level where once it goes up, it'll keep hitting some resistance, and then it'll bounce back off that resistance and come back down. And then there's times where when it's coming down, it hits support where there's like a bottom price. There's a floor price that is visually obvious on the chart that the price is struggling to go beneath. So a lot of times when an alert comes in, let's say, for example, you get a buy alert and you can see the last swing low that's on your chart is creating support at that price in the market, right? And the software can recognize that. The software can recognize structure, and the software can recognize, hey, there could be an impending breakout here from this new level of support going upwards. However, many times that support will get retested, meaning it's not just supports forming and then the market just flies off in that direction. The market can retrace back down to that level of support, bounce off the support again, or bounce off a price just below that support and then go in the direction of your favor, right? So what you can do is you can trigger your buy by placing a buy limit order closer to that support when it comes back to retrace and retest that level of support. If you get into a buy at that price, number one, you're getting into a buy at a lower price, right? So that's like buying lower, which is a bigger advantage. You didn't get into an initial trade where that you're going to have to deal with drawdown, which ultimately you'll learn that's not a big deal. But for a beginner, that's excellent to get in at a lower price that has lower drawdown, and you're getting into a trade on a retest rather than an initial breakout move, right? So that's considered more conservative. That's considered safer, because if a support zone or a support level is retested and confirmed, then there's an even higher probability that the price will continue to move upwards from that point, because the market broke through, came back down, tested that level as support, reconfirmed that price does not want to go below that level, and then it starts to go up. So that's like a double confirmation. So you're getting your first entry in after the second confirmation that that is in fact a support level. And then of course your stop loss is where your stop loss would have always been, but because it's so much closer to your entry price, your risk on that trade now is much, much smaller. And like, as I'm going to pass the call back to Coach Mo, I wanted to clarify that for those of you asking, like, why would you have your stop loss so close? Your stop loss was already there. That's where your stop loss would have been. It just looks like it's a lot closer because you moved your entry to be a lot closer to where your stop loss is, which is a more advantageous entry. If you lose less money. If you win, you could potentially win a lot more money. Your entry is getting in on a much better position in that move. And hopefully that brings a lot of clarity to those of you that, I know like Mr. Scott Morris, he's a trader, and he made a comment a couple of weeks ago one time in his group chat. He says, well, I noticed that when the alerts pop in, that sometimes it takes a little bit of time where, you get a buy alert, but then the market starts coming down. You start seeing some red candles after that buy alert, but then it kind of retests that swing low, and then it takes off to the moon. And he said, I learned to be patient, to wait to see a confirmation or a retest of that area, and then I get in, right? And that's so common. His comment was spot on. The alerts are telling you, hey, there's a great structure that's appearing right now on your chart for a potential breakout. If you wait and you put in a limit order and you're more conservative, you want to reduce your risk, you say, okay, if it retests, then I'm going to get in. If it doesn't retest, then I'm just going to wait. It can dramatically change your wins, because think about it. If you get into a buy at a lower price, well, then you have a higher probability of winning that buy trade, because you could even get in, and this is what I would love, Coach Mo, if you could show this visually. This is where if you get into a buy at a lower price, then if that limit order gets triggered, and because price comes down to retest and it hits your limit order and that opens it up and makes it an active order, if price just gets back to where the price already was when the alert originally appeared, you're already in profit. And that's where a loss or a break-even trade now becomes a winning trade. And depending on where your entry is and where that price is, by the time price gets back to your entry, you could have already had a 1 to 2, 1 to 3 risk to reward winning trade, right? So there's huge advantages to doing that. It's not necessary, and there's different ways to navigate that. But for those of you, again, with higher emotional states, you're newer, you're struggling with getting in on good entries, this is a great way to slow it down and to get in at a better price that increases your probability of profitability and decreases your risk between your entry and your stop loss. But I'd love, Coach Mo, I'm going to pass it back to you. If you could show just some of those ideas I talked about on, like, why would you do this? What are the advantages monetarily or financially? What are the advantages to getting in at a different price?
Yeah, I would say the biggest thing is reducing risk. And when you reduce risk, and let's say if you look here, you'll notice that this stop right here is approximately, let's see, $6.73, which means that you go into profit before it even breaks this structure above here. So look, so it automatically put me in right here. Now, it put me into the trade, right? Oh, here's a sell alert. That's cool. Let's actually take that. Let's close this. We'll go into sell. We'll hit the sell button right there. If I want to do the buy limit or the sell limit, hit the sell limit right there. I can close this out. There you go. So now we're in a sell limit. The risk here, let's clear the drawings here. So let's look at this here. The risk is $5. I want to put my risk a little higher right there. So let's say my risk right on this trade right now is only $8. So at $8, that's my risk, right? That's it. It's right here. It's $8. So it gave me the sell. I got in as a buy limit, as a sell limit. Instead of getting in at over here, where normally we get in way down here, now you're getting in the sell halfway between here and your stop. So you'll get into profit a lot quicker. And that's the power of this. So look, the sell came in, it went against us. But let's see if the sell limit ends up working out in our favor. Or that's how the power of the sell limit. You're literally, instead of risking what I normally would risk, which is about a $20, now I'm only risking $8.67. So look at this. I'm already in profit, almost 2 to 1. I'm already 2 to 1 profit right here. Do you see that? So in real time, you noticed an alert came in. It went against us. The sell limit is right here. My risk is right there, very small. And that's the power of setting up the sell limit. Because a lot of times the market, after you get an alert, will go against you a little bit, about 50% of the candle size. So that's why I put my sell limit right here. My risk is so small now. Versus before, my risk was $20. Now it's less than $10 risk. And look, it's already going in my favor. So if you got risks that are less than $10, but your wins are over $20, $25, I mean, that's really good. We're at a 3 to 1 right now already.
Yeah, it's amazing to see in real time this training, this strategy that we're showing you, it's being displayed in front of you in real time on a real alert, on a real trade, where some of you, if you would have got in on that right when that sell alert popped up and then it started to go green, you could have started to feel anxiety. Now, over time, the anxiety goes away. You realize that's no big deal. The market can just come back up and just retest that swing high where the sell alert popped in at, right? But if you're new and you're like, no, I'd rather get in at a better price and have less drawdown and have less risk of loss, then you can put in the limit order to trigger when that gets activated. Now, Coach Mo, you shared something very powerful this weekend at the live event in Northern California. Can you share how you were testing this strategy to show people in real time how it was working? And you took 21 trades on your account. How many out of the 21 trades using this strategy, how many trades did you win? How many trades did you lose? And what was the financial outcome of net profit or loss on those 21 trades?
I'll just show it to you right here. So if you look, these are all the trades I was taking. If you see all these trades, they were like 15 or 16 trades. Look, $7, $6, $6, right? All these losses, $6, $8. Well, look at this. All of a sudden, I took all these little losses, and then all of a sudden, $38 win, $60 win, $60 win, $60 win, $60 win. So what happens is you got all these little losses. So sure, you have more little losses like there, but then if you notice, all of a sudden you start getting these $60 wins. Now, if you notice these were sell limits that never got triggered. That's why it's not appearing here, but these did. So that these right here show, they basically show the potential profit here. I'll show you right here, $60. So that's the thing. I mean, when you've got a $60 trade and your risk is only $6, $7, I mean, that's really good. That's like a 10
Right,
to
that's
1.
a 10 to 1, 11 to 1, 11 and a half to 1.
I mean, look at this. This is already, my risk on this particular trade was what? You guys saw it in real time. My risk was at $7, and now I'm at a $40 profit.
Right, that's already a 6 to 1 risk to reward with a little bit of movement. And all you did was, instead of instantly getting in on the alert, you waited for that retest, that little pullback, to get in to a price at a higher price on a sell, which is more advantageous to increase that. And Coach Mo, share the math here with people. You took 21 trades. How many did you win? How many did you lose? And then what was your overall net profit or loss on those 21 trades?
I think I lost about 15 of them. I won about 6, and my win was, I don't know exactly the profit, but I know that it was quite substantial compared to my losses. I mean, I came out in profit like quite a bit. I mean, you saw the $60 trades. I didn't do the math yet, Sal, but it definitely was a significant profit. So I think that the losses were around like $100, and I think the wins was like around 240. So I think a $140 profit, something like that.
Exactly. So that's the whole point. It wasn't, it's not overly important on the exact dollar amount, but the whole point is, folks, is we're trying to demonstrate to the community that compounding your account and making a lot of money in trading is not about having a high winning ratio. Now, I always say this, is that with more practice, you will improve your winning ratio naturally. Obviously, just like anything in life, you practice enough, you're going to get better. But the good news for you, most of you are new traders, the good news for all of the new traders is that that's not what compounding your account is dependent on. You making a lot of money is not dependent on you winning most of your trades. You just heard an example out of 21 trades of Coach Mo just testing the strategy just to show this. He lost 15 out of 21 trades. What's the winning ratio on that? Oh my gosh, that's 25%. That means he's losing over 70% of his trades. He's losing. But because he's using a strategy that has a low risk to a higher reward potential, where all of his losses are $8, $6, $4, $7, $11, but then all of the wins, because the ones that do go in his favor are winning $40, $60, $70, $38. They make up for all the losses, to where with only 6 winning trades out of 21 attempts, he grew his account by over $100. That's the point. That's why we tell people, look, 95% of people lose their money in trading. And yet trading is actually very gracious. Trading is very forgiving. Now, some people never experience the forgiving side of trading. They think it's just hard and frustrating, and you got to be some crazy, talented, skilled master. But if you truly understand that it's all about risk management, it's not about accuracy, it's all about how you manage your risk, where you put your stop losses, what you're willing to lose on a losing trade, cut your losses short, let your winners run, you have an extremely higher probability to compound your account. And you can have a similar testimonial if you're a new trader where you could say, gosh, I took 21 trades. I lost 15 out of 21. Most people think, oh man, you must be just losing all your money. No, actually, I made over $100 today. Wait, but you said you lost 15 out of 21. Correct. Yeah, that's all I need to do, though. I only need to win 6 out of 21 to make a whole bunch of money, right? New traders don't understand that concept because they think you need a higher winning ratio. You don't. Trading is forgiving. Trading is gracious. You just need to learn how to take advantage of the grace by reducing your risk and increasing your profitability. And you can do this on every single alert if you choose to do that, right? One person asked in the chat, it was a great question. They said, if you do take the original market order right at where the price is at, and then you still enter into these limit orders, you're effectively just cost averaging. Correct. That's exactly right. This is just showing you how to set up essentially a cost average trade, whether you get into the original trade or not. Now, I helped develop the alerts. How have I since inception traded a lot of the alerts with cost averages? You see that the alerts come in at a place where you have a higher probability that the market's going to move in the direction of the alert. Most of the time it does, but sometimes, or even I'd say 50% of the time, there's going to be some rangy movement prior to the breakout. That's a good thing. As a trader, you want to know that there's an impending breakout before the breakout happens, right? The worst thing of a trading system is you're like, yeah, every time the alert comes out, the move's completely over and I don't even want to get in anymore. No, actually ours is the opposite. Ours is alerting you at the very beginning of the structure and setup of an impending breakout. What I've done is I've gotten into alerts right away, just in case the market does break out right at that point, because sometimes it does. You get a buy alert and then all of a sudden it's just like green, 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 right? That happens. I don't want to miss out on those trades, but I'll also cost average, where when it comes against me, I'm not worried because I'm like, oh, perfect. This is an even better place to get in because it's retesting the previous support or previous resistance. So I'm going to put in another trade at a more advantageous price so that if this becomes a winning alert, that cost average trade is in significant profit. And what happens is I'm able to get the cost average trade, or if you put in a limit order, you're able to get into profit a lot faster with a much smaller movement needed to get you into that profit, right? And it is a game changer. Some of you are in the chat saying, what a game changer. You're right. This is a game changer. And there's several things we're going to show you to help you crush it. And it's going to be simple, right? But we have to go in phases. Some of you didn't even know what MT4 stands for. We can't just fire hose you and say, okay, we're going to show you how to download MT4 and set limit orders and reduce your risk and increase your lot size by moving your stop loss and take profit with your trade manager. Your head's going to spin. You're going to be like, what? Right? And so I hope you're excited to see that trading is forgiving and that trading is gracious and you're in full control. And you could be a poor trader who loses most of your trades and still compound your account. There's hope for you. You should celebrate, right? Sometimes you feel like there's no hope for you. You see these testimonials in the chat, like last week, people who made 20%, 30% for the week, people who are averaging 30, 40% a month, and they're new and you're not. And you're like, what's wrong with me? What are they doing that I'm not doing? There's hope for you, right? So pay attention. Take notes. You know what those people are doing? Because a lot of the traders that were sharing their success stories, they're brand new. They've never had trading success before. The only difference I see from my vantage point as a leader within this community versus someone who may not be achieving compounding results yet is just the volume of practice. That's all it is, the volume of practice. The person who's learned how to compound, they're taking 20, 30, 40, 50 trades a day versus the person who's still struggling, they take like 3 trades a day. That's the only difference, right? You have to ask yourself, if someone practices something 50 times a day versus someone who practices something 3 times a day, well, who's going to get better faster? Who's going to change their results sooner? Obviously, the repetition and the volume is how you master, right? Spaced repetition is the mother of all mastery. So if you want to become a master at trading the alerts, then you just need to apply spaced repetition. That means you take a whole bunch of practice trades and then take a break, allow yourself to reset, allow yourself to reflect, allow yourself to absorb what you just learned with your wins and losses, right? That's called integration. You need a period of time to integrate the knowledge that you just experienced or discovered. And then what do? You go back, you practice again, and then you're going to learn more, and you're better, you're smarter, you're wiser, you're more comfortable, you're more relaxed, you're more familiar. And that's the key, is becoming familiar with this foreign process, no pun intended, right? We trade foreign exchange currency. This is a foreign process. It's unfamiliar at first. So your brain is not relaxed. You're not focused. You're in an induced state of stress. The more you do it, it becomes familiar. It becomes relaxing. It becomes normal, and you're going to have more clarity. And so this is a concept that you want to practice. Again, if you're new, if you're struggling, instead of just jumping in, don't just jump in. Then if you're struggling that way, go and place a limit order. And sometimes your limit order won't even get triggered because that alert's just going to break out and go to the moon, and you missed out on that move, right? There's pros and cons with everything. That's the downside to setting up limit orders and not having any market orders or execution orders, is because the price never came back to retest. But on the ones that do, you're going to have a smaller loss if you end up losing that, and you have a higher probability of winning a higher amount of money when that trade works in your favor. And if you practice that, I think for some of you that are struggling, it will change your trading journey, because you're going to look back. We've always said, don't look at one trade, look at every 20 trades and bundle them up together and say, how did I do out of the 20 trades? And you could say, oh, okay, I lost 11, but my average loss was $9. I won 9 of them, but my average win was $17. Well, guess what? You're going to have a net profit. And that's how you practice. Spaced repetition is the mother of mastery. So just want to add my input to bring clarity to you guys. We have 2 more follow-up trainings to share with this concept. There's 2 other important factors that you need to learn to maximize this. What we're showing you right now is already a game changer. This alone is going to change some of your trading results. The next 2 follow-up trainings are going to help you perfect it. The next 2 follow-up trainings are going to help you become a master at trading the alerts. Again, I'm going to mute myself out, and I'm going to pass the call back to Coach Mo. Thank you, guys.
Thank you so much, Sal. And if you noticed, everyone that's watching here, and those that are watching the replay that are members, you'll notice that this alert was amazing and went into profit. But initially, it went against us. And it went from here. The alert actually appeared right here, right? Came up all the way up to this point right here. I had a sell limit right here. If you look at it, I had a sell limit right here. My stop was right here. Super small, right? This was my risk. And then I went all the way down here, came back up, came all the way down here. And then once it went to this area, it hit my stop because I moved my stop down. So my risk was this little small circle. My reward was this big circle. And literally, if you look, I think, let me go ahead and clear the drawing here. If you look at the result here on this particular trade, you'll notice there's a $31 profit on this one trade. So at $31, if you do the math, my risk was what, 7, I think, about 7, $8. So $7 was the risk. 31 was the profit. So if you divide 7 by 31, what is that? 7 goes into 31 4 times. So that's 4 times, 4 to 1 risk to reward on this little move. I mean, it's not even a big move, right? So from here to here, basically from here to here, this move right here was basically a 4 to 1, 1 to 4, 1 to 4 risk to reward. So that's what that did. Now, if I would have got in at the bottom here, it would have been maybe like a 1 to 2 risk to reward, right? Because you got to think, if my profit was $31 and my stop loss was $20, that is not even one, that's not even a 1-to-1. Or it's 1-to-1. It's almost a 1-to-2. It's 1.5. So it would have been a 1 to 1.5, right? But instead it was a 1 to 4 risk to reward, just because of me changing it. For instead of a $20 stop loss, it was a $7 stop loss, or close to $8 stop loss. So that's what's really cool about this particular strategy. I see a few hands raised. I'm going to see if I could answer a few people. What is the prefigured limit percentage set at? The prefigured limit percentage is set at, just so you know, it's not really set at any particular thing. It's that if you get into, I'll show you again, if you get into a sell, let's say, right? If you look, this is preset at $20, right? This is preset at $20 based on this right here. So my preset is, as my stop loss is based on $20. But if I say, you know what, I want to cut it in half. So I'm going to I'm going to right click here. I'm going to click a sell limit. Now, if I delete this, let's say, to show you, my stop is in the same exact spot that it was on my original trade. It's only $9. So that's the benefit of doing these sell limits, is that it reduces your risk from what would normally be, let's say, $20 down to, $9 or $10. And so that's what this does. So the preset can be determined by you on your initial trade. Like I can go in here and say, you know what, I want my initial trade to be 1,500, which stands for $15. And then that's your preset for your initial trade. Your stop loss, or not your stop loss, your limit order, or your sell limit or buy limit. On this case, it was a sell limit. It puts the stop loss at the exact same place that the original was. So that's why it's down at $9 instead, because of that very reason. So that's what's really cool about this limit strategy. See, it just got me in the trade right there. So I'm in the trade now. I got my stop loss at $9.60. And so if it goes against me, I only lost $9 instead of $20, versus getting in at the very bottom of this red candle, because the market moves in waves, right? It doesn't just go straight down. It moves up and down, up and down. So now my risk is reduced by half, where normally it would be $20. Now it's down to, $9. So let's see if anybody else had a question here. What's the difference with the cost averaging? Sorry if this has been explained already. Okay, the difference between the cost averaging is the cost averaging, you have both trades in play. The cost averaging, you have the original trade and you have another trade. So now your risk is 1.5 times more. But with this strategy, you don't have an original trade. You only have a limit order when it goes against you. Now look how cool this is. Look at that. So you notice it's already in profit. It went against me, placed the sell limit right there, and it's already going into profit. So these sell limits really, really reduce your risk tremendously. So let's see if there's another participant's question here on the chat. What percentage of time? Oh, thank you, Mo. Amazing. Okay. What percentage of time would you guys say that it retraces enough to trigger the limit order? Say if you set the limit order at the 50% retracement level. That's a good question. I would say that it would hit probably at least more than 50% of the time. That's my opinion. I haven't really back tested it. I would say over 50% of the time it hits a 50% retracement level. And the times that it doesn't, it's okay, you know, and times that it does, you're reducing your risk instead of, you know, getting in at the very edge of a candle, especially if the candle's really big, right? If you got a huge candle and you got to put your stop loss at the other side of that candle, and that's like a $50 candle, then you definitely want to do potentially do a limit order, because, you know, to risk $50 and let's say your risk should only be 20, then it really, so on a $50 candle, you may put your limit order 75% of the way of that candle, because these candles change in size, right? Each candle is a different amount of money you're risking. Like this candle right here is a $20 candle, whereas the candle we're on right now is only a $9 or $10 candle. So if you want to reduce your risk, you definitely do, you know, about a 50%, 75% limit order from the point of your initial, where your initial entry would have been. But if you have a larger amount of capital, then you could potentially have multiple limit orders, and those are multiple cost averages. But if you have a small amount of capital, if you're not sitting on, you know, $5,000, $10,000, where you have the ability to have, let's say, 5 cost averages, like, look, this is a 0.05 on a 5,000. This is showing me that I'm risking 1% at a 0.05. So if you don't have a large amount of capital, you just got to be mindful that you do not want to, you know, you don't want to get into a lot of cost averages if you have $1,000 or $1,500 capital. So that's why this limit order strategy does that. Now, do you see how that limit, like it hit my stop loss, but my stop loss wasn't $20 or $30. It was only $9. And so that's the value of doing these limit orders. If there's any last questions or comments, let me see in the chat. Why can't you just move your stop loss down? Does that not reduce it? Yes, that does reduce it. That's a good question. If you get into initial trade and you move your stop loss down, does it reduce the risk? Yes. However, you didn't get in at a really premium entry point. You got in at a point that was, the move already happened, right? So it's almost like you want it to retrace and then you get in, right? It's the difference. I'll draw it out for you. So if, let's say, right, let's say there's a sell alert and it starts going down, right? And you get in right here. And your stop loss is normally right up here, right? But you say, you know what, I'm going to reduce my risk and I'm going to bring my stop right here. Well, yeah, as soon as it comes up here, it stops you out. And that's your risk. But imagine with this limit order strategy, same scenario, it comes here, your stop is right here. But instead of you getting in down here, you get in right here. And then your stop comes up and it never even hits your stop. And then it goes down. So the difference is here, you would have got stopped out. Here, you only got in at this point. So you got in at the 50. Your entry was here versus your entry being here. So I'm going to put an E for entry. Your entry would have been either here or your entry would have been here, right? That's the difference. Your stop would have been at this line. This is S for stop, and your stop would have been at this line. That's the difference to that question. Is you're waiting to get in. You're not getting in at the moment. You know, you're not getting in right away at the end of the candle. You're waiting for a retrace. So this had a retrace all the way back up to here. And then it triggered and then it came down. Versus this one, you got in here and then you moved your stop loss here. So you would have got out of that trade. So I hope that answers your question. Let's look at another question. Don't you take a loss due to spread when you immediately close the trade? Yes, sometimes you will, obviously, right? But sometimes it'll be in your favor and you'll be up $1 or $2. So, you know, sometimes you'll take a $2 loss or a $1 loss, or you'll make a $2 or $1 loss. But again, you don't have to get in to get right out. I just like using that as the trade manager, because I could literally set right now, I could do a sell limit right here, right? If it comes up here, there's my sell limit. The only problem is there's no stop loss. There's no take profit. The trade manager is not engaged. And so now I'm kind of like manually doing that, which is okay. You can, but I like the fact I could have my trade manager a part of it. So, and if you want to X this out, you can either click, you know, you can click on it, right click it, delete it right here, or you could delete it right here. See, look, it'll hit, let's see if it'll hit this, the limit order. But you can either delete it from the X here, or you could delete it by right clicking and click delete. Let's see if there's any more last minute questions here. Once your trade moves into profit, can you move your stop loss to the profit level? Yeah, absolutely. That's what I did on the last trade that I won for $31. I was moving my stop loss down. I had my take profit at like $78. My stop loss, I moved all the way down. And then when it hit my stop loss, I made a profit of $31 on that stop when that stop came back up. So yeah, you can move your stop loss down. And the way I do it, just so you know how I move my stop losses, is I look at these I look at every drop as like a wave or a leg. So I'm going to teach you another little thing right here that I look at this. So when the initial move started here, this is the initial move right here. It came down, right? The alert popped in right. This is like the 50% mark of this entire move. The alert popped in right here. Then it came down, right? So this is leg number 1 or wave number 1, wave number 2. So usually a move happens in 3 waves. So usually it goes 1, 2, 3. So 1, 2, 3. The alert popped in on a second wave, right? So what happens, what I do is I'll keep my stop loss at about 50% of that wave. So that's why when this move happened here, my stop was up here when I moved it down. And then as it continued to move down a little bit, I dragged my stop down and I got stopped out right here. But really it's the market moves in 3 waves. Look how it did it. It did it 1, 2, 3. And now it's going back up. Look at that. The market moves. Now, sometimes if there's enough momentum, the market will give you 5 waves or 4 waves. 1, 2, 3, 4, maybe 5, like that, right? And then start going sideways and then back up. So if you know that, then for you to wait and, you know, hold on to something and let it come back against you and lose all that profit, that's why I like to know, okay, this is wave 1, because where did this start? The origination point was right here. Wave 1, up, retracement. Wave 2, up, retracement. Wave 3, and now look, it's just starting to do whatever. So I like to bring my stop as I'm going into profit. It comes down, right? My stop was here. If it starts moving back up, I'm like, all right, I'm going to put my stop at about 50%, maybe 60% of the move. So I'll drag my stop right here. It'll come up, okay, and then come to the next wave down. Then once it starts coming like this, it starts moving back up, I'll take this stop, I'll put it around 50%, maybe 60% of the move, put it up here. Then if it doesn't hit my stop, then it goes down again. Then I'll take the stop, move it down a little further, bring it down here, and all of a sudden it comes like this. If I see I don't like how it's looking, I'll just exit right there. And then all of a sudden, oh, okay, it goes back up. So that's how I literally move my stop down based on these waves, so that I take profit off the table, but I don't keep my stop too tight. And that's how that's a really good strategy to manage your trades once you're in. Because people are like, now what do I do? Where do I take my profit? Well, you can manage your trade. You got your take profit at the bottom, but to manage your stops, you could bring them down halfway of every leg or every wave down. Hope that gave you guys another really cool nugget and tip. All right, let's see. Thanks. And let's see if there's any. Oh, is the same technique on a buy? Yeah, the person's asking me, does the same technique work on a buy? Yes, it works on buy and it works on sell. And I just want you to know, I was at the event today, and shout out again to that team and that group of people. So amazing. We were talking about this at the event, that what's so amazing is as the market drops in the world and people are freaking out, oh man, we're going into a recession. You realize we make money in this community. We make money whether the market goes up or the market goes down. So where most people only make money on stocks where the market goes up, right now a lot of people are freaking out. Their 401ks, their mutual funds, the stocks that they're in right now are down. So they're like, oh my goodness, I'm down 20% from, months ago, whatever, I'm down. They're down. It doesn't matter for us. For us, it's like we make money today when the market drops, and we make money today if the market goes up. Most people only make money when the market goes up. So they say sometimes the biggest profit you'll make is when the market goes down. And so we can trade in both directions. And so that's really great. And this community doesn't stay in trades for 6 months or a year. So we're a lot more flexible. So if the market moves in a weird way, or goes up really fast or down really fast or whatever, or goes up for 2 months and then drops a month later, we're not in the trade so long that we can't make maneuvers and benefit from all these moves. We can. Most of the world that's trading traditional stocks, mutual funds, 401ks, they can't do that. They're just literally watching their money drop every day, right? So that's what's so powerful about it. Let's see if there's any more questions. Yeah, no, we think we're good. So very good, very good. So appreciate everyone. You guys are amazing. I love this community. We're here to help transform and empower people's lives, to take action and to put the power back in your hands, to take control over your finances, over your money, over your profit, and just not making it too technical, too crazy, but giving you simple strategies that can potentially help your results be that much better and that much bigger. And if you notice, from training to training, it's like building upon the last training. We're training in layers. Imagine when you were here at the very beginning and you didn't know what you were doing, and you didn't even know how to click a buy or a sell, or you didn't understand a lot of the little terminologies that we're doing here. And all of a sudden we're talking about limit orders, and we're talking about all this, cost averaging, and all the different things that for a brand new person they don't get. So now that you're seeing, we're training upon last trainings, and it's still not crazy technical, right? We're not creating all this technical jargon. It's still very simple, but it's potentially a lot more profitable, right? And so what we focus on, I guess you could say, is number one, the trading psychology and having the right mindset. And I'm going to do another training this week, just so you all know. And it's going to help you not be emotional when you trade. It's really going to help you have the trader's mindset instead of a gambling mindset. So you need to shift your thinking. You need to shift your thinking from a gambling mindset to a trading mindset. And so I'm going to be doing a training. And those of you that have come to live events, we've had 2 live events and we've done these trainings at live events. Just know when you get to a live event, you always see a training before anyone else. When you get to a live event, you always see something amazing before the rest of the people. So those of you that are coming to Miami in 2-3 weeks, congratulations. You're gonna really experience an amazing time. You're gonna get insight that some people will not get unless they're there. Plus, you're gonna connect with the community of like-minded people in person, in the flesh, physically. You're gonna be able to connect with, the people that have had success before. Actually meet us in person. Some of you have never met us, right? Have never met Sal, Dr. Lewis, Ryan, Bob, have never met Dr. Wallet, right? Steve, people have not met Steve Wallet. You're going to meet the Ariazas. You're going to meet myself. So you get to do that in person and hang out. That's valuable. So come out to the event. It's going to be phenomenal. It's going to be amazing. But besides that, we're going to do a training and teaching you how to shift your mindset from gambling to trading, a trading mindset. And so we're building upon it, right? We're building, brick upon brick, precept upon precept. So those of you that are thinking, well, what about a brand new person? Like what happens to a brand new person that gets started today? Well, we'll still have training because we're archiving all our training and we're organizing it in this amazing new dashboard. Shout out to Ryan and his team, this amazing new dashboard that we're going to have onboarding training, onboarding meaning like how to set up your chart to be ready for an open trade and to be ready for sales. So we got onboard training. Then we're going to have beginning training, intermediate, and advanced. And a lot of that's going to cover from anything from psychology and getting the mindset right to strategies. Not technical stuff where you're going to have to learn all this technical stuff. No, it's more like a strategy and a mindset to implement that strategy and know how to really reduce your risk and keep your losses small. I say this every day, every time we get on here, keep your losses super small and your winners super big. Get your winners much bigger than your losses, and you potentially could be a sustainable, profitable trader. With that being said, God bless everyone. Thank you so much for being on today, and we'll see you again on the next training, next live session. Take care. Bye-bye.